Okay, hello and welcome back to Startup Grind community here at the CoinFest, the largest crypto and Web3 festival in Asia. We're tuning in here from Nuano City in Bali, from the Ash stage powered by ICP. And we're having a ChaTea Talks over a cup of tea. And we have with us today Kyle from Paxum, who is doing some amazing things, bridging the gap between real asset securities, tokenizing them, and providing liquidity, which is amazing. I think this is what industry is missing at the moment and has been missing for a while. There has been few examples, but it's still kind of a gray zone. So welcome, Kyle. Tell us more about Paxum.
Thank you so much for having me and really appreciate everybody tuning in. So the blockchain solution that we're working on is trying to address this liquidity component. I think that in the crypto economy, everybody realizes the massive opportunity in tokenizing assets and bringing real investments, real things that we own and trade and invest in today in the traditional markets. How do we bring that into crypto? Not only because of the fact that that's a more sustainable asset class, it's a much larger industry than what we see in the digital asset space, but it's also a little bit more reliable when we're talking about yield, when we're talking about opportunities to capitalize. You don't have to just rely on speculation in order to create yield for investors because you're actually creating real value in the real world. So right, yeah. This is a really exciting thing, but the hard part isn't actually tokenizing the asset or bringing the token onto the blockchain. The hard thing is building the liquidity, building the investor demand and the integrations into that traditional economic system. And that's really where I'm focused with Paxum.
It's like, well, what happened to, our mom and dads putting saving into bank account and then like having some interest earned every month? Like, are you doing something like that where you're kind of bridging those things? People have like a lot of crypto money somewhere in digital wallets. They're not doing anything with them. They're just like, it's a volatile asset. Yeah, as we experienced a month ago or a few weeks ago, and now it's like correcting, market's correcting. So you're saying that you can bring those solutions where you'd actually store that crypto asset into somewhere where they can like yield interest month over month? Or?
That's exactly right. I mean, let's just look at stablecoins, right? So these are things that are pegged to the dollar, the US dollar, or the Japanese yen, or the euro, or whichever currency in your local jurisdiction. There's almost $200 billion worth of stablecoins, and there's very few options to actually get yield on those things. Think about the dollars you have. You don't just stick them under the mattress, right? You put them into high yield accounts. You put them in opportunities to make 5, 6, 7% on your dollar, doing nothing, and those options need to be afforded to these serious financial institutions because they, if I raise a couple $100 million to invest into projects, I'm not spending that all day one. I might spend that over the course of 2 or 3 years. So over that time, I'm totally missing out on that 5, 6% that I would get in a high yield account. And so that's only the first step in this process of tokenization. But to build that liquidity into RWAs, we have to start with the underlying liquid assets to keep those treasuries on chain and to begin to help institutions feel more and more comfortable building solutions that fit into their traditional business model before we totally disrupt everything, which is maybe step 2.
Is that what Paxum vision is, to disrupt everything? But you're just starting with these first real world assets, tokenizing them. Is there something that you could like share with us about what's the other step of your tokenization? Is it like about in the real estate or other like real world assets? Well, what are you focusing on?
Sure. So, I mean, the great thing about DeFi is that a lot of the technology softwares around collateralized lending and offering these solutions via smart contracts already exists. It just doesn't exist for real assets. You can only use your crypto. So certainly in the future, we can build liquidity pools that allow people to stake their assets into yield-bearing assets as opposed to only relying on the current situation, which is where you're basically lending it to someone who's going to speculate and hopefully earn enough money to pay you back on your loan. And so there's so many options there. I think the biggest thing for us is focused on interoperability. So every blockchain is building real world asset tokenization solutions, and that's amazing. That's awesome. And it makes total sense for all of these different solutions like ICP, like a lot of the EVM compatible chains, and many of the other ones to build real world asset tokenization. There are not as many companies that are focused on how do we connect between these different chains to provide liquidity across chain. Because if you're a investment institution, you're caring about what the underlying asset is. If you want to buy real estate, all you care about really is the real estate itself. The tokenized chain that it supports is ancillary to the actual financial structure of the thing that you're building. Or if you're trading in commodities and you're interested in tokenized gold, whether that tokenized gold is on one chain or another isn't quite as relevant as what price are you offering to me for this specific asset. So building those cross-chain, interchain liquidity pools, I think is the big solution that we're working on to help any institutional banking partner or any liquidity provider in the traditional markets really feel comfortable deploying into this space.
I see. So you're talking about having a multi-chain, meaning that no matter if you have ICP tokens or you have Sol tokens or BTC or whatever, you can create that bridge between the real world asset and therefore create like a liquidity which people really need in a way like that you can borrow money, lend money from your whatever you stored in there. Okay, that's fantastic. I think that's very useful for many people who just have like a bunch of crypto sitting there doing nothing, just collecting dust, right?
And I just think that for so many hard workers and so many different blockchain protocols, a lot of times we see them get stuck on an island because they build their solution and they don't really have a great way to connect into the broader ecosystem. We're seeing that with banks as well, where they are trying to build some of their own software solutions for protection or for internal privacy, those types of things, but they still want access into that broader ecosystem. That's where we see ourselves fitting in, is at that kind of bottom foundational transaction level that allows you to connect into all of the different solutions, work with all the different partners that you want without having to compromise on the technical capacity that you prefer from whichever blockchain or whichever application you've built. So I think that a lot of the value of what we've seen from the Swift network and other traditional ACH networks that happen in traditional banking still need to apply in crypto, and we all can't just build our own isolated, segregated solutions and expect that to work.
I see. So where do you see the future then? Do you see it like multi-chain, multi-asset connections, or where do you see it moving?
That's exactly how I see it. I think that there are, from an institutional, from finance, from banks, from those types of players, they may want their own private kind of permissioned solution for internal usage, for internal data that's sensitive that they don't necessarily want to release, but they still need to connect into the greater ecosystem. They still need to have wires in and wires out and still be able to transact with the traditional ecosystem. And so I believe that multi-chain is for sure the future, and it's the best way that we can really rival the traditional solution. It doesn't need to be competitive. You don't see it competitive. Banks obviously compete, but they still connect into each other. They still provide liquidity to each other at the right price. Allow a competitive market to define and dictate those relationships as opposed to just having technical barriers in between. Not to mention, if we're talking about real world assets, your house, at the end of the day, it's off chain. This is a real thing that, so I do believe multi-chain is the future, because as long as it all points back to the real thing that has real value, then we can work with that and we can support it.
Just tokenize the whole world, right? Yeah, let's do that.
It's coming.
So for the end, where can people find Paxum, more about Paxum?
Paxum.io is our website. You can find us on socials as well, or look me up, Kyle Sonlin, and I'm pretty active in the industry.
Cool. And last thing, I just want to ask you, when we serve tea with the ChaTea community, we have these tea coasters. So you can just pick one of these, and underneath there will be a question for you.
Oh, fun.
Which you have like 30 seconds to answer.
Oh,
okay?
rapid fire?
You just pick one.
All right, let's do it.
And then you read it.
What's the best piece of advice you've ever received? Focus on getting 1% better every day, because 1% over 365 days is 37 times better by the end of the year. So just 1% better every day can make a monumental difference in everything that you do for the rest of your life.
Thank you for sharing, Kyle. Thank you for coming. And thank you all for tuning in. And stay tuned. We're going to come back to you soon from the CoinFest.Asia. Take care.